Welcome to Insight with Savvy and Sage. I'm Rob Brinkman, my partner, Chad Tongo. Chad, I'm so glad you dressed up today.
Oh, absolutely. This is fall. Fall is upon us. And, I'm getting ahead of the whole sweater thing.
You savvy guys, you can wear whatever you want. So my wife's like, "Can I dress you?" I'm like, "Sure." So she goes in and gets a shirt. I mean, so I got these specials. See, they spin. Look at that.
That's so cool.
Isn't
I
that
know
cool?
you look like $1 billion,
Yeah.
man.
So
I
what's
mean,
funny is I was trying to think, these cufflinks, they are no joke, 25 years old. And I remember, and this will tie into our conversation with Dutch because we're talking about investing. So I bought these in Denver, Colorado, because we were meeting with Tom Marsico. Tom was the money manager that put Janus funds
mm,
on the map, and Tom was. And when we talk about Dutch, we're going to be talking about a lot of insight in investing and so forth. And this is one of these really fascinating encroachments of AI bot trading that he'll, I'm sure, talk about at some point. But Marsico at the time, this is probably the late 90s. He was investing in real estate chains, right? So Breaker International, Landry's, stuff like that. And what he would do is he had some interns that would call on Thursday, Friday, and Saturday nights. They would call the restaurants and see if there was a table available, and they would call at 6:15, and they would then again call at 7:45. And what he wanted to know is just about every restaurant is busy at the first seating, right? Because people eat dinner sometime between 5:30 and 7:30.
right.
But if you really want to eat at a restaurant, you'll wait and you'll do the second sitting. So where a restaurant really kills it, where their margins increase significantly, is if they still have a big crowd that are sitting down at 7:45, 8, 8:15, 8:30, 8:45. Right now, that happens in the big cities all the time. I mean, New York, people don't even think about going out to dinner until 8:30 or 9 o'clock at night. But general restaurants, that second sitting is really super important. So this was an example of somebody that was doing data mining using college interns, picking up the phone and calling that other money managers just weren't
Yeah,
thinking about, right? They're just looking at daily sales and receipts and so forth. So I
right.
just thought that was fascinating, but it's a cool way to tie in my
Yeah, well, 25 years old. I mean, it might as well be a hedge for inflation.
exactly.
Yeah.
Yeah.
Treat it like a Rolex or something.
Yeah.
That's
25.
awesome.
You were what, 10?
Um, I was actually 11.
11.
I was 11, and I was probably roaming the streets of North Los Angeles County. That's what I was doing.
And then look what happened to Los Angeles because of you, right? I mean, it's all because of people like you.
Yeah, yeah, yeah. And then, we got older and grew up and decided
And
to
moved.
Texas.
And moved. That's right. Yeah. You grew up, figured it out, and then you got the heck out of Dodge. Yeah. So
Yeah.
yeah. So Dutch Mendenhall, he wrote a great book, Money Shackles, and he's a very thoughtful guy. And so I'm really interested in tapping his brain about a number of subjects. So why don't we go ahead and bring him on? Dutch Mendenhall, bestseller, Money Shackles. The cool thing about talking to a person like you is we can touch on a variety of subjects. So before we do that, give us some background about how you came about writing Money Shackles, the success you had that brought you to that point.
I talked with my tribe all the time about their pain, about their challenges, and everyday life. And when you're making investments, I think if you don't start with a healthy relationship with money, you're probably going to make some bad decisions. And so for me, my journey, I lived on my own at 16, car repossessed at 18, another one repossessed at 23. And I didn't learn about financial education, I didn't learn about wealth, I didn't learn about anything like that probably until I was about 25 years old. But from 25 to 30, I really went through this acceleration. And so it was about laying down a blueprint that now's got me to, several hundred million, right, in a portfolio with my partners and investors. And so it's like, how do you make that gap? How do you make that change? How do you make that leap? It's a deep dive in the alternative industry, which I've become this raving fan of, that I suddenly emerged into, right? The reggae industry, the alternative capital raising industry, and I've used it as a real estate investing vehicle, and so become a leader in crowdfunding across America. And so the book really dives into this story of, as a normal person, how do you get financially free? How do you break the shackles of a traditional system that doesn't work?
Right. So real estate, and there's a lot to talk about in the world of real estate. We'd love to hear you opine on a different areas, but where did you start? I mean, what was that very first? I love hearing these stories. Were your very first project that actually went well, made money, and you're like, huh, this works. I think I could do this again.
Yeah, I mean, my first real estate venture was, I attended this, commercial real estate course by this guy, Scott Shield, went through his whole thing, and I built this whole team, and it just, 6 months later, we hadn't gotten anything done. We hadn't made any money. And then I found someone who was already doing real estate and had some weaknesses or some struggles, and, was able to bring them buyers to deals. And so they were a flipper, fix and flip. And in that first year, we did about 40 deals. But reality is, it wasn't this big monumentous singular deal thing as much as it was finding something that somebody who was already in process, and then kind of joining it, and
Right.
doing, I had a network, and that network, wanted to buy, good under market, real estate.
Okay. Right. So on real estate, right? I was just reading a report. In fact, let's get your reaction to this. The report was basically about this fear that there's all these empty office buildings, all these commercial loans that are coming due. That and commercial is generally the debt financing is more compressed, often has balloon payments associated with it. But then what was interesting, when you look at the stats, right? Office buildings represent 15.53% of the overall commercial real estate sector. But you have big chunks like healthcare is 11%, hospitals are 7%, and then multifamilies are 18.45. So you've got these big sections. I mean, hospitals are full, right? I mean, nursing homes and assisted living, they're full. So it's not like every single real estate sector is in trouble. But from your side, where do you see that there are actual legitimate trouble spots, and where do you see opportunities?
I mean, office space is in trouble, right? And you look at vacancy rates throughout the nation. You look at the how long these leases are going for, right? Pandemic was 2020. We're in 2024, right? Your 3 to 5 year leases, will begin expiring here in 25 for those that first happened in 20, but your 1918, are already starting to expire right now. And so what you're going to have is a repurposing of the office market. You've seen a lot of this in New York City. It's probably one of the first, right, to change and start making adaptation. We're in a housing shortage across America. So, repurposing, office to do that housing shortage is an interesting game, but you have to have a crap ton of money to repurpose office space, right? It's not like an average, person is going to come in and repurpose this whole thing, never having done it, never had any experience, right? And so for the normal person to get excited that there's this opportunity, probably not, right? For an average person, but for your hedge funds, your big REITs, it's there. Now, I've been saying this, I went back to videos 2020, 2021. The office REITs have been buying and selling from each other the last couple years, and propping up their prices and holding up their prices. Like, if I had office REIT stock in the stock market, I'd sell it. There's zero chance I would be holding on to it right now. And so for me, that also opens up a window of new tenants, right? I run a small business. Some people maybe think it's a big business, but it's just a small business. When you have a portfolio, you're still running, a small company. We're 100 people. And so for me, it opened up a space where I, rent the 7th floor of the Wells Fargo building in downtown Tampa. But I never would have paid these kind of prices, 5 years ago, right? I'm paying, $22 a square foot here, for the year. And that's pretty dang good.
Yeah.
Yeah, we've seen a lot of that compression in Dallas in itself. Downtown Dallas. I was talking to a good buddy of mine who's got a pretty large law firm, and they had just moved to the Bank of America Plaza, right? A statement building here, and the amount of discount that they were able to get is insane. And they have floors upon floors of opening. I'm going to shift a little bit, Dutch, on your insight, kind of still in real estate, but moving more towards, rural kind of farmland topics, right? Part of what we've seen thus far, and it's been on the news, but I don't think it's really, something that people have talked about uh, strong enough and often enough, would be farmlands getting gobbled up by institutions.
Yeah.
We
Or
hear
foreign countries.
farmers,
Yeah.
yeah, we hear farmers, all the time just getting bought out. Do you have any sort of, projection as to where this is going? Is this the type of thing that's going to be sustainable? And then the latter part of that, is this just a small cycle? Are we seeing some sort of reversing on that? How are we mitigating that as a
Well,
country?
well, farmland is the one asset class where there's never going to be more of it, right? So there's always going to be less of it as we go through, the coming decades and years. Like there's a soil crisis in America that people really don't talk about, and so our amount of healthy soil, has a window, right, over the next 5 years, that it's getting eaten up, right? I think you got the Gates and the Bezos, and you got Musk. Like people don't talk about the billionaires own more land in America, just like they don't have more wealth, right? If you said there's 3 to 5 individuals and that own more than 50%, right, of all money in America, 3 to 5 people, they also own more land in America than anyone else, right? And so I think you're going to continue to see the gobbling up of land. They're not making more of it. You can't, suddenly create, more buildings. No, it's just farmland. And good land is important. And one of them has, their own, vested interest in what we call lab meat, right? And so obviously doesn't want farmland and doesn't want cows out there, right? Which is not my favorite. It depends on different views, but to me, I think there's nothing greater than a good grass fed steak. So I'm a hardcore carnivore to my core. Values in farmland are interesting because you can find farmland still for 1,500 an acre, but if you find a branded farm that produces income, it's 20,000 an acre. And so you think there's a 10x, right, 20x potential if you want to manage a farm the correct way. We started buying farmland because of the pandemic, right? We knew that there was going to be a need, there was going to be a drive to it. I think you're going to see farm prices shoot up again after this election. I think the tumultuousness of this election is going to, and somebody might be listening to this after the election and they can prove me right or wrong, but I've been pretty spot on with these predictions.
So, with that, are you seeing a lot of retail movement again, kind of pulling up their resources to fight against this institutionalized buyout, like
No,
what we're seeing? No.
no, there's no coalition, there's no organization that is standing up to fight against that, right? Now, we started putting out, a few years ago, foreign government ownership of American land. I'm very against that. For
Yeah.
me, let's keep American, farmland owned by Americans. Let's keep American real estate owned by Americans. And it doesn't matter to me, which American. I want it owned by Americans. So so we made that pretty strong push. We've seen some laws pass in different states. Can they enforce it? I don't know, right? But I think it should be, I think it'll be one of Trump's executive orders, or I think Harris is gonna also want to build up affordable housing, and so they both have real estate plans for sure. Sorry, I
Do you
tangented there a little bit on you.
No, you're good.
All right, last one. Do you foresee a need to put together a coalition of sorts?
I'd love to put together a farm coalition, right? To keep farms in the hands of farmers. The challenge you have is your average farmer has a very difficult time keeping up unless they have a large economy of scale. The
Mm,
income that they need to produce to pay their taxes, the income they need to produce, is they need, 20, 30, 40,000 acres to be able to do that, right? We own 7,000 acres and we're just starting to get to the point where we can start having some scale and start getting to that point. And, you're talking a $50 million portfolio when you start talking that size of acreage. So, that's really going to impact, the average farmer. And lots of times they want to pass it down generationally, but their kids have grown up being told, we're poor, and even though they own their own truck and they own their own 500 acres and they have this nice piece of land that is a dream for most people, their kids don't want to take over. And so then they get into this situation like, well, what do we do with it? And they get to an age where they can't continue to operate and run it.
yeah.
It's interesting when one of the expenses you brought up is taxes, right? And which ties in the the federal government with the local farmer, whether it's Trump or Harris. So in that report I was referencing, it talks about this big push that they want to set aside a 20% tax credit for conversion of some of these office buildings into living spaces, right? And the tax abatement they're actually floating out there is, a 90% tax abatement. The challenge is that it's so expensive to convert a 20-story or 50-story office building to residential. I mean, it's mind-numbing how expensive it is. It's actually better just to knock the bloody thing down, because the dirt that it's on is probably more valuable, right? So, but that's the top down. What I'm curious about, which I think was one of the catalysts for you writing your book, is the average investor, right? So, I mean, Chad and I run a tech company. It's interesting, we're building intellectual property all the time. One of the things we're looking at is our own dedicated server. That's incredibly profitable business. I mean, it's ridiculous how much money you can make. But you're talking 500 million, 700 million, $1 billion. It's not for the faint of heart. It's not the average investor is just not going to be able to get to that table, right? So you start talking about farmland. So, or is that where the coalition could potentially allow the average investor that has 100,000 or in investable money, or they have 200,000 or 300,000 in their Roth or their IRA? Is that how you can help those people?
Well, I think there's two different things, right? One, there's a coalition, which would be a gathering and a cause, right? And you have to, when we're going to build a cause, we have to keep the investment side, like what we're going to invest in, out of it, right? Because it's really about, how do we protect these farmers? How do we enable these farmers? How do we support these farmers, in a way they want it? We have what's called RAAD America, which is our farmland investment REIT, right? It's a Reg D, you're right, investment that people can make, and they can invest with us, and they can take, a piece of ownership with us in farmland, right? And there's some vehicles out there that do that. But the reality is, if you're a coalition, you've got to build a movement with a purpose and a cause, and we got to figure out which of those laws is going to protect those farmers. But the reality is like it's a supply and demand, marketplace, and so there's a supply of farmland in America, and if the retails want to buy it, or if the billionaires want to buy it, right, there's going to be a price where most farmers are going to sell, and I don't know I don't know what I don't know how the coalition could necessarily stop that, right?
Yeah.
And so the reality is how do we build something where people can be involved, they can be a partner, and they can start taking ownership in it, and for me it's really about keeping it in Americans' hands.
Chad and I, Chad, this is a conversation we just had last week, right? So if we want to have our own dedicated server, let's say we get a 100 megawatt server, and it costs us somewhere between 700 million and $1 billion to do that. The voices in that sector are saying, well, the top 3 companies are going to own all the servers anyway, right? So this is Amazon, Microsoft, Google are going to own everything, and they're really going to take over, just like what you're saying, right? You have these individuals that are buying all this land. And my counterpoint to that was, well, hold on. If Chad and I own our own server, our own 100 megawatt server, that doesn't mean we have to participate with the big 3. We can, if it's a profitable entity and we're making money, why can't we just serve the people that are on our server and be do our own thing? Why does there have to be this automatic default to encroachment to the bigger players, right? And it gets back to with this land situation, which I guess the question is whether we're talking. You mentioned 500 acres, whether it's 500 acres or 5,000 acres. I mean, I'm sure the computer guy with the glasses that wants us to eat plastic stuff, he owns millions and millions and millions of acres, right? Is there hope for the person that just can get 500 acres or 1,000 acres? Is there still hope for them?
I mean, if they're wanting to run it as a lifestyle business, right, and they're wanting to, they have money, right, to be able to buy the farmland. Yeah, there is some hope for them. It's just very difficult. Like if you and Chad want to own your own server, and the big three own 90% of the servers. And the challenge is like, in today's world, can you compete? And that's the question you're going to have to ask yourself, right? The way a farmer maybe compete is, the locals farmers market and local, produce food and joining coalitions. Like, there is a way that they can compete, but they're going to be capped, and there's going to be a max level to their growth, right? They're going to have to be patient. They're going to have to be smart when they do it. And here's the thing: is like, there's an endless amount of regulatory stuff that's coming into America, that's been coming into America. And even though we had a deregulation, right, win this year, against the federal government, the question is, can you compete? And that's a question I think any small business owner, any entrepreneur has to ask themselves. And it's one of the reasons, I got into, helping others raise money and raise capital too, is because money is one of the ways you're going to have to have if you're going to compete in today's business world.
Yeah.
It's almost impossible to compete without money.
Right.
Yeah.
You said
Yeah.
a super important thing.
And lots of it.
Right. A super important thing, right? The word you used was lifestyle, right? There's no
Say that part again.
You said lifestyle, right?
Yeah.
When I asked, can it be profitable? Can you do this? And you said, yeah, if you want to do it for a lifestyle. There's no rule or law that says you have to be the next Google or the next Facebook, right? Look, it's your individual liberty and your individual freedom, right? If you want to have a business that you can raise, get married, raise a family, have a nice lifestyle, provide for them, that's awesome. You don't have to be this big player, right? And so that's where you mentioned, local community markets, but it's also niches, right? If there's a, you mentioned we all like steak. I mean, if you're able to provide legitimate grass-fed, no steroid, no antibiotic beef, there's a market there, right? And it's a function of, the economics of getting it to someone's door. But yeah, I think, and that's what I love about your ability to articulate for the average person, right? That it's okay to operate within your sphere and have a good lifestyle. You don't have to be the next big thing, right?
Yeah, I mean, it's an interesting conversation, right? Because if you want to serve grass-fed beef, right, there's a ton of regulations you're going to get through, right? If you want to have a lifestyle business, there's a way you're going to approach it. But the reality is, that's all business owners, right? Whether it's that tiny, small business owner that's just trying to survive, is no different than the person who owns $100 million business who's fighting to grow and survive, because both have to adapt or die, right? You're either going to adapt, and the only way through is through, and every small entrepreneur is going to struggle. Every medium-sized entrepreneur is going to struggle. Every large entrepreneur is going to struggle. And yeah, there's the one out of, a billion that, invented Facebook and is suddenly a multi-billionaire. But if you ever, I'm sure there was an endless amount of struggles before the financial, before that personal financial journey, before the business financial journey maybe stopped being a struggle.
Yeah.
So you're either going to, everybody's going to make a choice. And if they want to do it, is it possible? Yes. Is it going to be a battle and a war to get there? Yes. And one of the things I talk about in Money Shackles is like, hey, move into the unknown. It's the only possible way you're going to be able to succeed at anything as the world is to step into something where you don't know what the end result is going to be. And that is, a challenge for a lot of people. But if they know that's what they have to do to be able to succeed, that's what they have to do.
Yeah. I want to come back to that, going to the unknown on the investment side, but let's take a left-hand turn here. When you said you have to adapt or die, it kind of triggered something for me. So you have a passion for baseball, right? So
I do.
So where's the connectivity point for baseball for you?
I mean, I grew up playing it, right? I think it's the greatest sport in the world to teach a child how to fail, right? and they must, get back up again. My wife, I have a 7 and 8 year old, right? And I'm managing, a little league team right now. And my wife's like, why are our kids doing baseball, right? They don't love baseball. I said, they will love baseball. I swear. Right. But reality is, I don't, at the end of the day, I want them to have fun and it's time with dad. But at the same time, I want them to fail and have to immediately get back up and perform,
Yeah.
and if you're going to be successful at anything in life, you must understand failure. And if you can't understand failure, you'll never succeed.
So the cool thing about baseball, which you probably, which resonates with you, is just there's this deep tradition, right? and this is one of those things that, for instance, when you see the movie Field of Dreams, right? And this is one of those misnomers when people they kind of go down a path, and I have to challenge them on them. This whole thing about if you build it, they will come, and I'm like, well hold on.
If you don't market it, it doesn't matter what you build.
Sorry for the interruption, but this is our shameless plug that if you like the content, like the interviews, please subscribe. And what else should people do, Chad?
Thumbs up, like, and share on all your social media platforms what we do here.
That was really good visual. People are going to be very impressed with how you coordinated your hands with your mouth. That's great.
Thank you. Hand-mouth coordination.
Yeah, look at the movie. It's not like the field was just it was just dirt and just crabgrass. I mean, it was a beautiful field. It was a field that every baseball player would want to play. And so if you're going to build something that they will come to, you got to make it appealing. But that's a side subject.
If we swing the camera over here, I have the Field of Dreams on the wall here.
Nice.
So Mateo's like, you're not touching my camera.
Yeah.
So he actually went and lifted the painting. Yeah. He went and lifted the painting off the wall, right?
Yeah, he can bring it over.
So,
yeah.
You guys can see. Yeah, I got Field of Dreams right. I got Field of Dreams right here. So
nice. Look at that.
It is, right?
It's beautiful.
Pretty cool. I grew up in Iowa, which is interesting. I've been alive for some like pretty crazy baseball stuff in my life because I lived in San Francisco when Bonds hit 70, right? I was in the Bay Area when Moneyball was written, right? Like I've lived some good dream baseball stuff. So
yeah, so that's I wanted to get to the Moneyball thing, right? So
okay,
I'm a huge Michael Lewis fan, and so there was success with the adaptation of looking at, or let's put it this way, data versus tradition, right? Tradition is that you bunt to move the runner to second, you steal a base, or that kind of, and the data says no, don't do that, right? So, and this gets back to the investment world, right? So, from your baseball perspective, are teams using a lot of Moneyball data crunching, and they just don't talk about it because it kind of goes against the romanticism of the tradition of baseball, or was it a flash in the pan and it just kind of it hit a wall and it's back to traditional baseball?
Well, so what's interesting, there was a long tradition of statistical analysis in baseball, right? But there was a long tradition of scouting based on physicality, based on perception, based on what people see with their two eyes. And I've talked this a lot of times. To me, if you're going to be great, you have to marry science and art,
Okay.
And the science is the data, but the art form is being able to see, beyond the data, But the reality is data doesn't lie. I went to I spoke on a panel with a company called Dwellsy and in New York City at something called Fin Battle. And it was interesting because you had all these hedge funds and you had all these AI data companies, and they were basically marrying them together. And the hedge funds are trying to get ahead of the curve when it comes to data. They want to know what weather's coming in. They want to know what, if a traffic light breaks down, they want to know, if this certain type of car is parking in this neighborhood more often than other cars, what does that mean? And they got deep into the new obesity drugs and how that data is going to affect other drugs, down the line. And so as you look at that, you have this old school belief when it comes to here's what good fundamental investing is. And then you have this new age AI and data AI. And if you're going to be great, you're going to have to marry the two together. Because if you're only AI data, you're going to end up like Zillow and lose $500 million, right? And you're going to end up, making big time mistakes. Like I can sit here and tell you all day long, it's good for a hospital to be built in a city. But I can also tell you that same hospital is going to have a ghetto on one side and gentrification on the other side. And the ghetto ain't going away, right? And so, the other side of the railroad tracks in real estate is very true because there's city lines, there's school districts, there's crime rates, there's all kinds of different things. And it doesn't matter, how it gentrifies on one side. It takes a monumental leap for it to go to the other side, right? I'm not saying these things are right or wrong. This is just, pattern data, right? Over years as you read stuff. And so in the modern world, Moneyball, if you're going to run a company and make investments, you better read Moneyball. I think it's a foundation of information, when you're going to say, here's how I look at a problem and solve a problem. Here's a problem solvers, right? Because business owners, investors, you have to be problem solvers. Otherwise, you're going to run into a problem you can't solve, and then you're going to fail.
Yeah.
Right. Yeah, it's that out of hand rejection of data, right? Which gets people in trouble. So, I mean, it didn't make in the movie, but in the book, there's this moment where Billy Bean is challenging his scouts about, we need more batters that get walks. And he brings up this one guy from Alabama or something like that. And the scout knew him. He goes, Billy, he's like 280 pounds. He's a catcher. He's just so overweight. And he goes, yeah, but he gets a lot of walks. He gets on first base. And he goes, yeah, because he's too fat to run down the first baseline. So that was the answer, right? The data says he gets on first base. And the response is, no, I don't believe the data. And my answer is personal attack. He's too fat. I mean, it's one of those weird juxtapositions that and this is where, it goes into a whole other tangent about trust the science. Well, it's science by definition is further research. You got to verify, constantly verify. There's never the science says this, end of conclusion, end of conversation, right?
I mean, do you guys ever play poker?
Yeah.
So if you're a poker player, right, and you go sit down at the table, the table's going to have a read on who you are as a poker player, right? Are you a tight player? Are you a boorish player? Are you a bully? Are you going to bluff a lot? Are you a grinder, right? There's all these different descriptions. And so what's interesting is what I like to do when I play poker is play counter to what the table's view of me is. So if the table thinks I'm a very tight player, I'm probably going to play very, very, very hard, right? I'm gonna bully. If the table starts to see me as a bully, I'll lay out some hands that make it look like I'm a bully, but I'll actually play super tight and conservative, right? When you're in an industry like baseball, they got this big thing on, on base percentage, because he went counter to the normal experience, the normal way things were done in an industry, but he still had a successful formula, right? To be able to create it. And now we're seeing the successful formulas like, let's hit home runs, right? Put the ball over the fence, we're going to put up runs. And so it's a different way of looking at it. And so the game is kind of shifted again, and as you get more and more, savvy experience-wise, you're going to find more and more ways it's shifting. And so, in the investment world, what's interesting is you have to start taking a look at, like, how is the game shifting, right? You have AI bot trading bots, and you have AI bots trading bots against each other. What's that going to create, right? I think it's going to create some really rapid explosions in the market, and I think it's going to create some really rapid, implosions in the market, and it's going to create more volatility up and down. And so if you don't know the art form and all you have is the bot and you have the science, you're going to end up getting hurt,
Yeah.
But if you're just this conservative person and you follow the Dave Ramsey plan and you invest long-term, super slow returns, what's going to happen is you're going to fall behind hyperinflation and fall behind, what's happening in the market. And so, I'm not saying the life of an investor is easy, but this is why they have to have a healthy relationship with money, because if they don't, all these details, all these things that are going on it's going to skew them into making bad decisions, or they're going to get advice from an advisor who's never been wealthy, and so, yeah, it's just interesting. I mean, I can sit here and tell you my opinion on investing, but somebody else is going to have a different opinion, and 40 years from now it's not going to matter, but today it matters to us.
That's absolutely spot on. I think it's a perfect segue talking about the investment side to have you kind of elaborate a little bit on what you alluded to in the beginning of our chat here about alternative investing, right? I think there's much more to unlock. I know that's part of the conversation or part of the topic that you have written about in your book, Money Shackle. Is this, what is alternative investing for the sake of, retail investors? Can you elaborate a little bit more on that in your position?
Yeah, I mean, really, alternative investing for me is a break from Wall Street, right? It's not about the trading of stocks on a daily basis. And there's a wide variety of investments in alternative. There's very conservative, which is one of the buckets. Like I always go with the bucket analogy, right? You have to have your no risk, your low risk, moderate risk, high risk. And then, so me, there's always 4 buckets. And if your money's not in all 4 buckets at all times, you're never going to be successful with investing. And so the alternative industry offers all 4 buckets. Wall Street, to me, maybe it offers all four buckets. I don't think it does. And I don't think it consistently keeps you in your bucket, right? You might have a moderate risk that turns into a high risk, or you might have a moderate risk that isn't getting you the kind of returns that a moderate risk investment is supposed to get for you, right? 2012, the Jobs Act passed, changed the alternative investment game forever, opened up a whole new industry. And one of the things that really opened up to is high risk investing for your non-accredited investor. And people are like, well, how's that sound sexy? Like, a non-accredited high risk investing, right? By the way, the whole accredited, non-accredited thing I think is unconstitutional, right? So it's just my own personal belief there. I think they need to get rid of it. I'd like to see, someone pass an executive order and get rid of it. So, but going back to the high risk is huge for them, because, when could Joe, who is working his 9 to 5, makes, 80, 90, 100,000, is saved up, built an IRA, built a 401k, done things right. But when does he have a 100x potential return? When can he do that? The only way he could ever get a 100x potential return is if he started his own company or his own business. But in the alternative investment industry, you can invest in other companies. You can invest in lots of different companies and spread your risk out. You can take $100,000 and invest it in 100 different alt companies. And in there, you're going to get some 10x, 20x, 50x return. Yeah, you're going to have some losses. You're going to have some companies that never make it. But I'll tell you what they did in the industry for me is they gave companies like mine, some other incredible companies like Golf Suites, Boxables, EnergyX, Miso Robotics, right? Rise, RYSE, right? These are incredible companies that now have the money to compete, right? Before, if they built these businesses, built these industries, and they went and created something like Golf Suites, right? They're competing with Top Golf, right? They want to take down Top Golf. They want to build a better model for it, right? Boxables, they want to build affordable housing, right? We know that that's needed in America right now. And so, these are companies now that have 50 million, 100 million to build their infrastructure, build their operations, get through the red tape, do something they couldn't do before. And yeah, it's kind of a baby in the sense of industries, right? You're talking about something 2012, we're in 24, 25, right? So, but the reality is it's a, $20+ billion industry. It's growing fast. I think it'll be the greatest competition to Wall Street we've ever seen. I think it'll be $1 trillion industry in 5 to 7 years. And what industry could you look at that's a multi-billion, that was a zero industry 10 years ago, that's a multi-billion dollar industry and it's going to be $1 trillion industry in 5 to 7 years? It's going to blow Americans' minds.
Yeah, it's interesting. And again, this is a wonderful retie into baseball, because you bat 350, you're in the Hall of Fame, right? Which means you're striking out 6 to 7 times every time you're at bat.
I just needed Moneyball to come out about 5 years sooner. I hit 540 on base percentage, not hit 540. That'd be really cool.
Yeah,
I had a 540 on base percentage as a sophomore in college, and Moneyball wasn't out yet. So me getting hit, 18 times and walking 25 times didn't matter in college baseball. At that, probably mattered to my team, but it didn't matter to the scouts and didn't matter back then. So
yeah.
I blame Billy Beane for not getting it done faster.
Exactly right. Yeah, and for Michael Lewis to be so slow on the uptake. But one of the secrets that people don't realize with VC firms and private equity firms is not every one of their deals is a home run, right? Out of 5 deals, 1 or 2 go under. 1 goes sideways for a really long period of time, and then 1 or 2 really do phenomenally well. But that the 1 or 2 that do phenomenally well make up for the losses in the 1 or 2 that didn't do well, and the break even just kind of goes away. So back to the average investor, right? That type of situation, how do they go about protecting themselves that they don't end up picking the losers that just never come through? And not everyone's going to be a winner, but how does that every person address that?
Yeah, I hate getting on someone's podcast and I feel like I'm pitching, right? So I want to be careful, as I share this with people. Like our workbook is badass. It has a checklist, right? It says don't invest. An average person probably shouldn't invest in a non-revenue company, right? Unless they're passionate about it and they're putting a small amount of money, right? Don't invest in a unicorn. Well, a unicorn is like a company that's never existed in an industry that's never existed before, that suddenly has this great idea that's going to build a multi-billion-dollar plan, right? Don't invest in a company that has so many regulations that stop it from ever being in business that it's likely never to get into business. And so it has a checklist that you want to go after. What's the DNA of a founder, right? Has the founder have a history, a track record of success? Do they have a history and track record of success in that industry, which is a separate category? And then they got to create a score sheet. And at the end of the day, they need to look at their score sheet and say, hey, is this a company I can believe in? Is this a company I want to invest into, right? But they also need to be careful and not go insane, right? You can't get excited and fall in love with something. If you fall in love with an investment, it's probably one you shouldn't invest into.
Yeah.
And so, and suddenly, take an alt company that is in the high risk bucket, right? A new alt company that's raising capital, and that's in a high risk bucket. Put that back in the camera. High risk bucket, and put all their money into it, right? They need to put a moderate or small amount of money into it because they need to put, majority of their money into the low risk, moderate risk, right, buckets, and put some money into the no risk bucket. And people need to balance as they do it. But the reality is like they need to create a set of criteria. At the end of the day, every person has to create a set of criteria before they make an investment. And if people just hear about an investment and they get excited about it and they make the investment, that's a mistake. And they have to set a set of criteria, look at a company and say, what's the reality? Is a company, never had a single, skin knee in its entire life? It's actually a company I'm careful of, because that means they've never been able to adapt through difficult or challenging times. Or has a company been in business a long time and they've adapted through many different variations, many different evolutions as a business? That's a company I'm more interested, right? A worn-torn, battle-worn, founder to me is a lot more excited than a new kid on the block.
Yeah. Well, first of all, we don't mind you plugging what you produce, right? Because when somebody is trying to sell me something, when they tell me they're not trying to sell me something, that's where I get kind of, wait a minute, that's odd. And it's interesting what you say when Chad and I, when we wrote our mission statement, vision statement, our core values, one of our core values is fail forward, right? You're going to make mistakes. Just make sure that you're making a mistake in the correct direction that you can learn from and move forward, right? So
I always say fail forward fast.
Yeah, very good. Yeah, because the speed of change is important. So landing the plane. When back, let's kind of touch on something we didn't really spend a lot of time on, and that's the whole crowdfunding space. What are some misperceptions that people have about crowdfunding that you can help clarify that would be valuable?
Yeah, I think the crowdfunding space is this huge space, and so people that get it and understand it, is not the people with the misconceptions. The people with the misconceptions is like they're think about crowdfunding as helping the guy who got in a car accident, with his little girl and got on news, and they're going to go help them fund a campaign to help his daughter through the car accident, right? Which I'm all for, but that's not crowdfunding, right? It's the kid in the company that's trying to build popsicles in India and build a popsicle stand in India, and they're going to go get crowdfunding for that. Some of that stuff does exist, right? But the reality is what true crowdfunding is real businesses, and that could be venture angel type of businesses that people can invest into. They can be real estate businesses, REITs people can invest into. And so your mainstream businesses in America have alt investment opportunities, right? Oil, gas, alt opportunities, right? Phoenix Capital Group is one of those companies with great variety of oil and gas, right? And each of these companies I've listed today are great mainstream investments people can make. And the reality is now they have the capital behind them to really grow. And so you can get your different normal investing buckets through the alt space, through the crowdfunding industry. I think if you go back 10 years ago, crowdfunding had a lot to do with cannabis. And cannabis was hitting the scene, and cannabis has taken a dramatic fall, right, in the last probably 24 months, right? A lot of businesses and companies have gone out of business in that industry, which tells you what? Well, in another 2 years, there might be a window of opportunity there, right? As it consolidates and that industry goes through an evolution. I stay away from it because I don't like anything that the federal government can say is out of business tomorrow. That's me. But I'm a little more conservative than some. So for me, though, it's mainstream. And I think that's the big thing people have to understand, that crowdfunding is a mainstream investing tool for Americans. And it's more available to non-accredited investors And that is something that didn't exist prior to 2012. Prior to 2012, I believe the greatest investment vehicles in America were not allowed for hundreds of millions of Americans. And so for me, that is now open, and it's now an ability for Americans to be able to invest in American businesses. And I think that's the other thing is like, hey, let's go build a business in America. Let's grow American business. And that's important to me, part of crowdfunding. It's heavily regulated. I think that's the other thing that people have to understand, right? If you're going to do Reg A, there's going to be audits, and there's going to be, financial reporting, and there's going to be third-party vendors, right? For us, we've had these, external evaluations of assets and properties, over the years. And so that keeps an eye on the industry. And yeah, you got to monitor your investments, and you should never be over leveraged into any one investment. You should always be diversified across the board. But, investors don't listen, no matter how much you tell them that, right? Too many of them put their eggs into one basket, or too small a basket.
Yeah. Yeah. Well, this was really cool. And what I think is also cool is people can just go to your website. It's dutchmendenhall.com, right? I mean, it's that direct. Obviously, get your book, but going to your website, there's going to be a lot of information to get plugged into. So, do you have any other visions, any other things you're going to write, any other areas that you want to explore?
Yeah, I mean, I'm constantly looking at like what's the next book going to be? What's the next alt book going to be, right? And I think, a roadmap, a business plan for an American investor, I think is one of the next books we've been talking about writing. I think Money Shackles is fantastic, but it's very diverse. It's very broad. It's very much like if you're trying to learn something about everything when it comes to investing in alt and your relationship with money, I think it's phenomenal with that. I think we have a gift actually on the site that has a 44 video series that people get, that has, combined with every chapter, there's a set of videos that helps them with the relationship with money. But I think, people having that pure roadmap to alt investing is important, because if you want to get those, super significant, returns, you can't put all your eggs in one basket. You got to know how to analyze those companies, break down those companies, which ones to invest into, which ones not to invest in, and no AI in the nicest way can trade all alt investments for you, because they're not, a Wall Street type of thing. You're going to have to make those decisions yourself. But I think there's been widespread started adoption by, RIAs, in America, advisors in America, and you're going to see more and more of that. And you should push your advisors, right, to bring in more alt investments into their portfolio they're helping you look at. So
yeah. Well, look, brother, you write something else. We'd love to have you on to talk about it. You're a super interesting guy. You're a thoughtful guy, and you have tremendous insights. So, Dutch, we appreciate your time.
Thanks for having me, guys. Appreciate it.